Welcome back to the Informed Minority YouTube channel. This is the second episode of the day trading journey. I will be talking about the trade that I took on Wednesday, December 18th, 2024, the MNQ short at low resistance liquidity run. So this is the trade that I actually ended up taking. It was post FOMC and actually after the FOMC minutes, and we'll kind of get into that why I decided to wait until then, and also why I decided to take a trade on Wednesday. So I tried to get into a trade on Monday, and TradingView had hit me with their doing maintenance on paper trading. So I was not able to take one. So because I did not actually take the trade, there's nothing for me to show. I'm only going to show trades that I actually took. So this is the trade that I took on Wednesday, post FOMC minutes. So here's Wednesday, December 18th. As you see, we had large expansion day, and that's what a low resistant liquidity run looks like, just so you can get a reference between last episode where we had high resistance and this episode we have low resistance liquidity run signatures. As you can see, just one-sided. So this is pretty much how I kind of set up and I look at the week, right? So I look at days that I really want to be trading and days that are low probability. So on Monday, especially after a large range day on Monday, the day after I'm not interested in, and if you look at Tuesday's price action, it's nothing that you want to be trading. Also, it's the day before FOMC, so it could be choppy as well. So you have a lot of things telling you that you do not want to be in that market at that time. On Wednesday, we have FOMC statement at 2 p.m., but the real move is going to be coming at 2:30 with the FOMC press conference. So that's what I was keying in on. Thursday, again, after a large range day, what do we not want to do? Trade. So I don't want to trade on Thursday and potentially could be trading Friday. But as I will not be trading on Friday, but this is pretty much how I look at the week and how I'm picking days that, in my eyes, are more probability of the trade that I'm looking for panning out. So again, we're talking about how do I know the market type? How do I understand what to predict for the next day? So as we see here on Tuesday, right before FOMC, what do we have? An inside day. So what does that mean? After an inside day, the day after or a couple days, I think what ICT has said, but we expect large expansion. Also on the weekly chart, which I do not have up here, we had a weekly fair value gap with an order block, and that could be a downside target for us. Also with major SMT on higher time frames, but we're just kind of talking about MNQ and kind of how can I predict the next day to look something like this. So as you see the next day, this is a large range day. We had FOMC as well. We're piecing a lot of things together to help us come to idea or a narrative of why we should take a trade, why we should get into a trade. So before FOMC, you can see that we have SMT on the 15-minute time frame, right? That's our bellwether chart. That's what we're looking to see, things that could help us get a signature of potentially things that we could be looking for in price. And you see on MNQ, we did not make the higher high on MES and YM. We did make a higher high. So I'm mainly looking at ES over SMT with YM, but in this case, I will use YM to see if we have a decoupling of the market and all that other stuff. But for the trade that was on Wednesday, just looking at overall SMT, that would give us a signal that potentially we're looking for lower prices. Now, this is something that I kind of wanted to show and zoom up in on, right? So we had the Fed rate announcement at 2 o'clock. We trade lower. Now at 2:30, FOMC press conference, notice how we trade against the overall narrative, right? So we're trading up. That's exactly what we would want to see going against the underlying narrative, which in our eyes, or in my eyes, was bearish. So we were looking for bearish price action. So here's just a little bit of kind of where the targets were. Like, you guys know that I target $100 and that's it. And this obviously went way past that. And the how I framed it up was down here, we had this new day opening gap. I wish I had that chart up so I could tell you the date, but notice how we have consolidation around the consequent encroachment of that new day opening gap there. So for me, that's a key area that I'm looking for, and that was the sell side where I could frame a setup to take a short lower. Now, if we look at here, this is kind of like the end of day things that I will do. And here's just a little thing that kind of helps me with identifying key fair value gaps that I want to see being held. So here we have two 15-minute fair value gaps. If I ever see that, or there's three of them, I will go a time frame higher, usually one up, to see which fair value gap is important. Now, I don't have the hourly fair value gap picture, but this yellow box is the hourly fair value gap. And as you see, the body is held. It colored out the lines a little bit, but we know that's FOMC. But they were held in the lower portion of the 1 hour fair value gap. So that to me is key and significant. And we have layered lows down here. We have this sell side liquidity, and then we had this one, which was the weekly fair value gap low, which I think was last Tuesday's low, I believe. So we look on the 5-minute chart, and this is where I'll start to flesh out kind of how I got into the trade and how I, came to put it on. So again, what we're looking for is in a bearish market for price to remain heavy and not trade up to the upper portions of fair value gaps, of order blocks, of breakers, of whatever PD array that you're looking to get in at. That's what we see here. So this gave me a key signature. It was like, okay, we couldn't even trade up to 50% of this fair value gap. And then we trade lower and displace. Now here you're like, oh, there's no real displacement. But when we get to the 1-minute chart, and you'll start to see some of the things that I was looking at and looking for. So this gave me the idea, and this is why I note the 5-minute order block. So once it traded up into that, I'm waiting until it comes back up into this, and then we're looking for a short opportunity. So here on this picture, you have the 5-minute fair value gap, you have the 1-minute fair value gap, and you have the breaker block. So I tried to take a trade actually when it traded up into here, and I got hit again with the paper trading. They're doing maintenance on TradingView. So I actually entered there. So I got the entry there, and you'll see that on the slideshow again when I get into that. Staying below the lower portions of premium arrays, which is exactly what we want to see, right? This, we ended up reclaiming this, and so we could take that short there as well. So there's a lot of shorting opportunities there, shorting opportunities there. But again, I'm only looking for $100. That's all I'm doing. And when I get past that, I will start doing that and aiming for my actual targets. But as long as it can offer me around 50 points to get to, then I'm willing to take that trade. So here's the first presented fair value gap from Friday, December 13th. As you see, we use that, right? So that's why ICT talks about continuously having your first presented fair value gaps, the daily highs and lows, looking at the macro times, like the opening range gaps, making sure you have all of those on there because they will be used again. As you can see here, we colored outside the lines a little bit, but we were able to, we used it again and ended up trading lower and softer. So I kind of wanted to show that part there. Again, I like ending off kind of so you can kind of see what I was looking at and where and how. My stop loss, because I entered here, my stop loss originally would have been up here at this, the high of this candle. But because it didn't let me enter in there because there were some problems with TradingView, I entered there and I put my stop right above there. And then that was just at $100 to right there. So that's why it looks like that. Obviously, I would be looking for the lows that I had pointed out and a runner for the weekly fair value gap. But this is overall pretty much the trade. This is what it looks like. That was my process of picking the day, knowing what time to start looking at the charts. And this was the trade, and this was the result of that trade. And like I always like to do, I like to end my videos with, how can I improve and what did I do well? How can I improve? I need to make sure I'm looking at my matrix from my 5-minute time frame down to my 1-minute time frame. And that would have helped me get a better entry up in here, up inside of this fair value gap, because again, we have 1, 2 fair value gaps. So what should I have done there? Was go up to a higher time frame. If you look on a 2-minute chart, you'll see that there's a 2-minute fair value gap, and it pretty much stays below, again, the consequent encroachment of that fair value gap. That's exactly what we would want to see. So that's what I could have done better with that, but also looking at the other charts, looking at the first presented fair value gap, which you see here, which would have gave me even more confidence to put the trade on at this level and not get in right at this fair value gap here. This is what I was trying to get in. So that's what I could have done better and will continue to work on. And, what did I do well? Again, with patience, right? I knew that The news is going to come out at 2:30, which is pretty much right here. And you see a protraction against the overall range, overall direction of the day. So that's what I was waiting for. And also, I didn't give up. On Monday, I pretty much had pressed it and it didn't work. So I kind of just let it go. This time, I had pressed it, it didn't work. And I was like, you know what? I'm going to try again. And I tried again and it worked. And I was like, okay, well, now we're in the trade. So that was something that I'm very proud of. That I was able to, I didn't give up on the trade idea. I didn't give up on the setup. I didn't give up on myself, even when, TradingView was not allowing me to enter when I wanted to get in. Sometimes that may happen in a live environment. I don't know, but it's something that I was faced with today or when I took this trade, and very happy that I was able to do that. Thank you for staying this long if you did to listen to kind of hear how I break down the trades and what I'm doing. If you like this type of content, make sure you like, comment, and subscribe, and maybe even share with some friends. I'm just trying to share the things that I've learned from ICT and how I use them for my own specific model and the way that I look at the market. So if you're interested in that type of stuff or just want to look at another way to view the market, I will be putting out these videos every single week. Next week, I will not have a trading video up. I'll have to figure out what I will be posting, but it won't be trading because I'm going to spend time with my family. Again, thank you guys for watching. I really appreciate you guys, and I'll catch you guys on the next one. Peace.